Yo, what's good, guys? Okay then, so listen, this is my problem with Bitcoin, and I'm going to do my very best to make sure that I can convey my idea about what it is that I am seeing Bitcoin doing and how it's going to be affected, or the price action is going to be affected in the near term. This is the problem with trading. There is no loyalty. When price is dropping, everyone is losing their minds. When price is rising, they instantly completely forget about what's been going on and the sentiment has been changed. Happy days to the upside. Wonderful. You see, each candlestick that you see in the charts is a response to people committing liquidity, okay? As you can see, Bitcoin has come from what we would understand to be this pattern down here. Now, we're always looking for patterns. This is the basis of the channel. We are trying to establish where are we in the chart. Are we in a cyclical move to the upside? Have we got a level 1, level 2, level 3, peak formation? Are we at the week, midweek reversal? This is what we are trying to establish every single day when we come to the charts. All right? Now, this is a nice move by Bitcoin, and we have said Bitcoin needs to hold above the 200 EMA for us to believe that it is going to continue higher, because we can't simply just be bold and make moves and just go all in and hope that every time we do that, Bitcoin is going to move in our favor. If the nature of trading was like that, fine. No one would watch YouTube. Everyone would just sit at home and they would be printing money every single day. But that's not the case. Why is it that 95% of people that come to this game lose? It's got nothing to do with the way price moves. It's all to do with people's interpretation of where they think it's going to go and how much money they are committing at that point in time in the belief that it's going to increase in value, or is it going to decrease in value? So that we can understand and get on the same page, this is the problem that I have. Bitcoin is moving away from this zone. And we have seen this behavior happen over and over again. All right? Let's take a look back in time. Back when Bitcoin was in and around this zone right here. Now, this is when it was at the 60s point. And we were talking about Bitcoin needing to break above the 800 EMA. All right? If it can break the 800 EMA and confirm, it will move away from that zone and Bitcoin will continue further up. All right? But we were witnessing market maker presence. Notice the green vector candle zone right here. Notice this one down here. And then notice this zone right here. Now, during this time, people were like, yo, Tino, man, Bitcoin's going to go to the moon. It's going to go to the moon, go to the moon. But the business model of the market maker is to make people believe one thing is happening against the next. Well, who's the market maker? If you are new to the channel and you're asking who is the market maker, or you're hearing this concept being thrown about everywhere, and you need clarification on it. Sorry, nice little boomer moment for you, ladies and gentlemen. We need to understand who is it? Who's actually moving price? Okay? So, let me introduce to you Alameda Research. Alameda Research is a company, a market maker. They tell you about what they do and the services that they provide, but more importantly, the strategies that they use, which is what we like to explore in the streams. Now, you may have seen me talk about this before, but this is why it's important that you understand it. Their strategies, okay, split into 4 concepts, but the number 2 and number 3 are more important to me. Okay? Firstly, medium timescale quantitative strategies. These vary greatly in terms of sophistication, using techniques which range from simple, such as mean reversion. 90% of what we do in the channel is based on price reverting back to the mean. Why? Why is it important that we focus on price reverting back to the mean? Well, that's pretty simple. Because when price does come back to the mean, it tells us whether or not the momentum is going to be present in the chart. For example, look at this. Every time they came back up to the mean, which would be in this instance the 200 EMA, we would see that they would react in certain ways and trigger orders in and around this moving average, because people place orders in these zones in anticipation that price is going to bounce away from it. See, when you actually break the chart up like so, and you look at it from this point of view, you then say to yourself, Bitcoin's getting ready to make a move to the upside. Look, it's holding. This is the support. Bitcoin's now going to go and then moving up. The sentiment itself is in creating people to commit and make them make a decision and say, right, I favor Bitcoin moving higher. See, we've done this before, ladies and gentlemen. We've seen that we've got a pattern right here, and it looks like Bitcoin might be coming away from the zone. We've got the liquidity pools up here. Of course, we have the 800 EMA up here. That may be a little bit of a problem, but I want to get involved in Bitcoin right now because I believe it's now going to move higher. Well, then when we start moving things across and we say to ourselves, hold on a second, that 200 EMA is pointing downwards. Momentum looks like it's still favoring lower prices. We have to proceed with caution. They can't break above the 200 EMA, yet the market maker always likes to utilize this point because this is the point where people get positions set up so that they can anticipate a breakaway from those zones. Just watch what happens. How many times do they activate that 200 EMA? Move up, come back down, move up, come back down. And then what happens? Bitcoin completely drops. You see, the idea is to get people to commit liquidity so that the market maker can set up his positions against yours. All right? Go back to the actual techniques. Mean reversion. And then to complex such as machine learning. Machine learning, in my opinion, from what I understand, is the algorithms that are filling orders, okay, spoofing out the market where they are creating fake orders to induce traders to commit liquidity in one instance, or what we would understand to be stop hunts. Look at this. Price makes a move to the upside, traps the traders there, and then reverses. We know the presence of the market maker because he's got 1, 2, 3 hits to the high. We know that's a setup play. All right? Now, what I'm trying to say to you guys about Bitcoin's current situation is this. Right now, Bitcoin is coming away from this zone. Wonderful. There have been many instances that Bitcoin has done this behavior and that we have spoken about in the streams. Let me show you this. This was Bitcoin at the 800 EMA. All right? We kept on saying Bitcoin needs to break above this zone. It has to do it. Look at the pumps. 1, 2. Vector candle, wick, 3, 4, and 5. They are moving price up aggressively, yet they're not really going anywhere. If Bitcoin is going to move higher, it needs to move away from the zone completely. Now let's go back to where that point was in the charts. At the 800 EMA. And that was all the way over here. 1, 2, 3. Look at the vectors. Vector zone 1, right there. Now we've got the wick, right there. And then you witness the sickness. They dropped it all the way down. Yeah? There's the chart. Let me bring it to you again. If you can see it a little bit clearer. The liquidity was there in the zone. They had hit the highs 1, 2, 3 times, mean reversion, inducing traders to believe that liquidity is going to be released once it goes over the 800 EMA because it's a key moving average. They hit that zone 3 times. Market maker, the strategies. This is the guy that created Alameda Research. Good old Sam. He's the market maker. This is who you're up against. Inside this brain, he has pioneered a marketing system that will allow him to offset and take advantage of people's liquidity because he has been so kind enough to provide us a market. They are the market makers. And you can see their strategies. We provide liquidity in all major coins and on altcoins on top 35 exchanges. So market makers themselves do exist. But because you can't put a face to them and they operate algorithms, you seem to think that they don't exist. You then say to yourself, hold on a second, well, how does price action reflect the market maker's behavior? Well, this is what the hybrid system talks about. The hybrid system is there to help you understand the nature of the way they move price. Now, going back to where Bitcoin is right now, you can see bright as day. Bitcoin is coming away from the 200 EMA. Happy days. Let me go to my problem. The problem that I've got is they're not recovering the vector candles sooner. Let me show you an instance. If Bitcoin is going to move higher, all right, I want them to recover the vector zones, at least make an attempt towards them, and then bounce away from those zones. Look at this last move that they made to the upside right here. Okay? Nice W formation. Price moves up. Retraces. It comes down and hits at least 50% of the previous vector. Then it moves away. How long it moves away for? Well, that's the case. That works. That's all down to how long you decide to take your trade and how long you want to hold it for and how much money you decide to make. Remember, the problem that people have is when they get into a trade, they think that this is going to be the moment that Bitcoin goes and absolutely sells to the moon. Unfortunately, ladies and gentlemen, that's not the case. Now, if you're a holder and you want to play the longer game, it's a different story. These fluctuations in price are part of the territory of being a holder or a position trader. This strategy talks about day trading. The hybrid system resides on taking advantage of these movements where the market maker develops his bigger play. Now, I don't want to be the person that says to you guys that Bitcoin's never going to go up. Of course it's going to go up. But this is the problem that I have. The fact that they are not coming down to these pools of liquidity, retesting them and bouncing away from them. You see, these zones right here are pools of liquidity. Now, this is where they had built their shorts. If they're not coming down to these zones now, they will come to them very soon. People are like, yo, Tina, I thought you said we were expecting another drop to the downside. Yes. But this move to the upside by Bitcoin is not a sustainable move, in my opinion. You've moved from 41,000 down here when this actual move started, 41,600, and all it's done is gone all the way up to 44,000. $3.5 move? What is that? That's not that much of a big move. But the way people see it is Bitcoin's pumping, Bitcoin's pumping. The way the market maker sees it is liquidity's coming in, liquidity's coming in. Someone released an image. They shared an image of a company called Kingfisher that provides the liquidations and where the liquidity is currently at. As it stands now, it appears that there is roughly around about $400 million worth of longs being built in this zone. That's $400 million worth of traders' money. That's $400 million worth of shorts that the market maker can utilize because he builds his shorts as price is rising. So you can see what my concern is. Now, when is it that the market maker is going to realize and release the liquidity to the downside? Look what day we are, guys. It's Thursday. We understand that cryptocurrency tends to have a reversal point during this time of the week. Now, in Forex, which this pattern is based on, okay, the reversal point is on a Wednesday because that's the midpoint of the week. You see, Sunday is the day when the pattern is developed in Forex because Sunday, 10 p.m. GMT, that's when the markets open. And then you have the first day of the week. Monday, rise level 1. Tuesday, rise level 2. Wednesday, rise level 3, peak formation, midweek reversal. Thursday, drop level 1. Friday, drop level 2. Saturday, Sunday, peak formation, and the game starts all over again. This is the structure that we're looking for in crypto. But in crypto, trading operates 7 days a week. So the pattern forms at the weekend. So the start of a new trading week in crypto begins usually, depending on your broker, on a Saturday. So this would be Saturday. This would be Sunday. And then you've got Monday in this area here. Then you've got Tuesday. Then you've got Wednesday. Then you've got Thursday. Then you've got Friday. Then you've got Saturday. Then you've got Sunday, Monday, and then it starts all over again. This is what I'm trying to convey over to you guys. Excuse me. Our goal is to try and take advantage of the market maker's short-term attempts at trapping liquidity and moving it from one point to the next. He builds his shorts as price is rising. He doesn't go long when it rises. That's what retail traders do because the retail trader is buying. And in order for him to buy, someone has to give him the contract opposite so that he can sell. Let me break it to you like so. You've got the retail trader like this, and then you have Binance, all right? And then you have the market maker right here, okay? The retail trader comes over to Binance and says, hey, I'd like to buy $100 worth of Bitcoin. Binance gets the order. Binance then pings that order over to the market maker to get the liquidity for him. He reverses. Market maker comes back to Binance, says, okay, what's the fee? What's our negotiation? How much are we charging each other? Happy days. That's been established. You then get the order of $100 worth of Bitcoin longs to go to the upside. You pay your market or your limit order. Happy days. So now the retail trader has $100. Now let's look at let's consider this. If the order of this retail trader goes up, okay, he's now in $100 worth of profit. Well, when he brought his long, the market maker sold short against him. Because you can only buy when someone sells. Where is the liquidity going to come from for the retail trader who goes long when he wants to realize a profit? You see, when a profit is realized for the retail trader in his long, the market maker's trade as the short is in the negative. But he is always going to be in the negative because he builds his positions in the opposite direction. So as price is rising and his shorts are being placed, he's getting the best possible price for his shorts at the highest possible point because he is expecting to move price down and attack these previous zones of liquidity so that he can make a return. Okay? That's how he moves price. He can only move it in the direction of liquidity if it's present. You see, behind these longs right here that are being shown in the chart, there are liquidation points, which is your margin. You see, Mr. Retail Trader who goes long puts up some liquidity up front. That liquidity, or the margin, is for the market maker when he comes back down to that position that he sold him the long at, okay? And he can tap that liquidity and he can make his money at that point. Again, when price is rising in your favor and you've got a profit, that's the market maker's liquidity. That's why I say to you, pay yourself. Let's flip it over. What about when price is going against you? Now your long is actually negative. Okay, so you are now down $100. What happens? The market maker's trade is positive. So what do you do as a retail trader? You add to your margin. You increase your liquidation point. You keep adding liquidity. That's what is happening right now. The fact that they're not coming down to these notable points in the chart tells me that liquidation points by the retail traders are coming in the masses. No one's paying themselves. So the market maker is going to move price in such a way that he can keep the retail trader's commitment locked in the chart. We could get Bitcoin make a move to the upside right here and hit this pool of liquidity. That would be the absolute zone that the market maker will trigger the retail trader to stay committed to his longs, and then he is likely to try and reverse it back down again. What I'm trying to say to you guys is the following. This move right here, as much as it looks great to you, happy days. But the problem I have is at some point, the market maker is going to come back to this zone because he's spending too much time contained in this area. We have seen this behavior over and over again. Look at this zone right here. They move up and then they snap it back down again. Sentiment is high right here, yeah? Just look at this area here. At this point, this is when we were looking at the fear and greed index, okay? This is when I was saying to be cautious of looking at that because it can set you up for failure, all right? So the fear and greed index at that time was roughly around about 10, okay? So traders were feeling like, oh my goodness, you know, Bitcoin is at 10, the fear is 10, retail traders are scared. Well, this is where this is where the market turns. Well, that's not what happened. They completely obliterated the range because people started going long in this area. People were buying the dip. And this is what had happened. This is what I was trying to prepare everyone to be aware of. Be cautious when you bottom fish because this is what happens. Now, just if it doesn't happen, does that mean what I'm saying is wrong? Because it hasn't happened, does it mean you don't pay attention to it? You're dealing with the realm of uncertainty, ladies and gentlemen. Anything can happen. Bitcoin has this habit, or should I say the market makers have a habit of showing us nice moves to the upside, no recovery of the vectors, and then bang, they come down and surprise us with a lovely move to the downside. The same way people are feeling moon boyish and bullish to the upside, if they are not taking consideration to key zones in the chart that they use to exploit traders, you're going to be the trader that provides the liquidity for the market maker so that he can run off his shorts, and guess what? He can then start building his longs again. Now listen, as much as I'm saying to you that I have a problem with this move to the upside, that I don't think it's going to be sustainable. I mean, if we look at the Bookmap itself, you can see where the liquidity is currently stacked at. That is quite frightening. Okay? 234 Bitcoin, 169 Bitcoin, 317 Bitcoin, all stacked in and around the 40K range. When we zoom out and out, you can see that there's no liquidity up here, and all the liquidity is down here. Look at the order book. It's not made up of many orders now, is it? Yeah? Live orders, that is. Look, all these red bits here, they're not many orders. 265 Bitcoin at 50K. But what is it made up of? Is it made up of high liquidity or low liquidity, or just hundreds and hundreds and hundreds of traders' orders contained at the 50K zone? But look, there's hardly any liquidity there. Look at the difference between 500 orders at 50K, 265 orders there, and then you've got 234 orders in and around the 40K zone. There's a big difference, isn't there? That's where the liquidity's at. So principle would say that we would likely see that zone. If this zone disappears and they start putting orders up here, I would have the conviction that they favor higher prices. But just look at the mad amount of liquidity. This is high liquidity. Whether it stays there or not is a different story. Now, Bitcoin is moving up. It's Thursday. Are we going to see another hit to the upside? Because if Bitcoin's going to drop to the downside and it's going to continue back up, all we are looking for is price to come down towards this area right here. And if it can bounce from this zone, you would be looking for vector candles, so candles like this, coming away from the zone right here. Because there's more liquidity for them to take up here. Just because there's $400 million worth of longs opened here, does it mean that the market maker is going to go for it now? He might want 600 million. He might want 800 million. We can never assume that the value for the market maker is going to be contained, or should I say, he's going to go for it because 400 million sounds like it's a lot to us. No, it's not. To the market maker, it's not. This zone right here is just 400 million. Look at all the liquidation points that happened when this bad boy move happened. Yeah? So what I'm trying to get across to you guys is the following. If in the short term Bitcoin's going to hold this zone, it will need to break away from it and stay above the 200 EMA. What your entry point is, that's down to you. Follow the pattern. You make the decision. Be accountable for your decisions. Okay? That's the basis of it all. I just had a call from Steve. And he notified me about Bitcoin's price action. Anyways, jokes aside, I hope you're understanding what I'm trying to convey here. The issue that I've got is they're not coming down to these pools of liquidity just yet. So if they are there, it's being advertised that there's money for them to take. The question is, when will they take it? If you've managed to make some money from this move to the upside, pay yourselves. Increase your capital. If you are holding on into dear life in hope that Bitcoin's going to continue higher, guess what? That might just be the case. Bitcoin may even still continue higher. The only way it's going to continue higher is if it can hold this range. If it's consolidating sideways at the start of the New York session, Bitcoin will start to rise again. Happy days. But there's no one in the history of trading that went broke paying themselves. No one went broke taking a profit. All right? That's all I'm trying to convey over to you. I've told you what my concern is. Simple. There's liquidity for them to take. They're moving up, but they're not moving up aggressively. And it just gives me a reason to believe that they may come down towards these zones just so that they can tap the liquidity. Just keep that in mind, ladies and gentlemen. That's all I'm trying to convey over to you. Mad love and respect for you passing through to the channel. Be sure to keep up with us. Later on today, we're going to be going live again to catch the New York session to see what Bitcoin's going to do next. Have yourselves a wonderful day, and I'll catch up with you later. Take care of yourselves. Peace.